A sound retirement plan isn't about trying to time the stock market or chasing the latest hot stock tip. It's a comprehensive financial plan that includes tax reduction strategies, estate planning, maximizing your Social Security benefits, and how to safely turn your retirement savings into an income-producing workhorse. Make way for Gerry Benjamin and Woody Alpern, two CPAs located right here in Atlanta with over 55 years of combined investing, tax, and retirement planning experience. Welcome to the CPA Wealth Advisors radio show.
It's the good life, full of fun, seems to
Hi there,
be
it's Woody.
the
I'm with
ideal.
my partner and co-host, Gerry. He's running actually a few minutes late. He's going to be here in the studio in a second. But, man, we have a cool show. It's called The 10 Commandments of Retirement Planning. It's actually going to be a two-part show. It has to do with a lot of year-end stuff. We're coming up on year-end. A lot of things you got to get done before year-end. And let's be honest, for many people, you know what? Planning for retirement, it really can be complicated and it can be overwhelming. And I get that. You know what? If it was a piece of cake, you would have already done it. You'd have an up-to-date and well-thought-out plan in place right now. But here's the truth, and we know this for a fact. Very few people have any plan at all. They're just literally frozen, kind of like a deer in headlights, because they don't know what to do. So you know what they do? Nothing. But I really don't think it's your fault. Listen to this. They say it takes 10,000 hours to master a skill. And it's totally unrealistic for you to master the ins and outs of all this stuff. And what is all this stuff? Well, we have asset allocation and rebalancing. You know we have to think about taxes. You know we have to optimize Social Security. We can't forget about the dynamic withdrawal strategy, critically important. And how about generating income in retirement? And then there's your insurance needs. And all of the critical nuances that go into planning for your retirement, especially when you're already juggling a 40-hour work week. Maybe you also have a family at home. There's no way anyone can do that. But we can agree that doing nothing at all is a recipe to throw all of your hard work down the drain. But I would never leave you hanging like that. We have good news for you today. We've done the homework for you. So on today's show, we're going to summarize the 10 most critical components of retirement planning, the 10 areas that are going to have the biggest impact on your money in your retirement. And we got them organized into what we call the 10 commandments of retirement planning. So if you're feeling overwhelmed about planning for your retirement and you don't know where to start, our CPA Wealth Advisors are here to help, and this is going to be a great first step to get the help today. Not having a well-thought-out plan for retirement, remember, that's a recipe for desire. What are the most significant things you can do that will have the biggest impact on your money and your retirement? I'm going to have all those answers coming up next. Also, call us at 770-622-9145. We'll be right back.
Time to get your financial act together. Now you can get a free customized retirement analysis with CPA Wealth Advisors. Discover proven strategies to generate more income in retirement. Learn how to maximize your Social Security benefits and minimize your taxes. And now back to Gerry and Woody on the CPA Wealth Advisors show.
It's the good life, to be free and explore.
Welcome back, everybody. It's Woody here on the CPA Wealth Advisors radio show. My partner, G. Al, you know I like to call him G. That's an affectionate way for Gerry.
I like G.
G will be here any minute because there's no way G would miss this show. The 10 Commandments of Retirement Planning. We really thought a lot about this. We've really thought about what are the most important things you need to think about by year end, get done, and then this is actually a two-part show because I'm going to roll this over also into next week, and I'm going to incorporate some other stuff. Yep, you got it. Tax tips. The top 8 year-end tax tips. So this show and next week's show are a combination of the 10 commandments of retirement planning and the top 8 year-end tax tips. So we got a lot to cover because this stuff can be complicated, but if you really break it down into its parts and you really force yourself to do it, then the complication goes away and the benefits are huge. And sometimes you can do it on your own, and that's great. We're all good with that, and we promote that on our show. But we want you to be truthful with yourself. Sometimes you just need, I'm going to call it a coach, somebody in the background nagging you, keeping you on track, forcing you to do these things. And when you get off track, they're going to knock you back over the head and keep you on track. And that's okay as well. And that's called a wealth advisor. Yes, I believe our CPA Wealth Advisors are the best of the best. And in fact, they were ranked number 1 in Georgia. Got to be a reason for that. I'm really proud of that. So again, I believe some people can do it for themselves. Absolutely fantastic. And I hope you get great takeaways from our show where you can do all this stuff on your own and you really are doing it. And if you can't, come see us and see what we can do for you. Oh, you can come see us, by the way, by calling us at 770-622-9145. Now, let's get started on these 10 commandments of retirement planning. Well, number 1, right off the bat, you got to create a financial game plan. You got to sit down and you have to take the time to really come up with a detailed plan. Now, that is just a bunch of words. What in the world does that really mean? Well, let me tell you what we do when you come and see us. And again, maybe you can do it on your own. Or maybe another advisor has done this for you. I hope they haven't done it, said it, and forget it, though, because this stuff changes all the time. When you come in and see us, we're going to interview you for an hour and a half. We're not going to give you answers. We're going to get information so that we can develop a detailed plan. And that plan has to think about your working years. It has to think about as you're nearing retirement, and then it has to think about as you enter retirement and the various different years within retirement. The plan changes every single year. We have to consider your income sources. We have to consider your expenses. We have to consider a pre-retirement and post-retirement budget. We have to consider ways to maximize your retirement contributions, how to optimize your Social Security, and how to take advantage of one heck of a complicated tax system. That's a financial game plan. And guess what? It doesn't just get made in 1 year and then never looked at again. No chance. We change it. Sometimes every 6 months, sometimes every year. Really important you understand that a financial game plan is a lot of things, and it takes effort and discipline to do it. And if you do, then you have a roadmap to follow, and you can meet your ultimate retirement goals and objectives. But guess what? Without a retirement financial game plan, you don't even necessarily know what your goals and objectives are. That's really important. That's just one of the 10 commandments of retirement planning. And I felt the need to talk about that one a lot. And I told you, it's great if you can do it on your own. But if you can't, why not invest in yourself? Do you want to know what the best investment in the world is? And very few people really know about it. The best investment you could ever make, it is investment in yourself. Absolutely. And when you invest the small amount of time to create a thoughtful and well thought out retirement game plan, it will not only pay you dividends for the rest of your life, but it will also have a snowball effect that is really going to impact different aspects of your life that you never even imagined. So why not discover that with our 5-point retirement master plan? And again, this isn't about simply picking a handful of stocks and bonds and mutual funds. That's nice, but that's just a small part of it. It's a comprehensive plan that covers everything. All of the things that we talk about week after week, and especially on today's show, and then some. And when all these things work together, I'm telling you, the profound impact it's going to have on your lifestyle in retirement is huge. And the sooner, of course, the sooner you get started, the better off you're going to be. And guess what? It's nearing year end. We don't have much time left. So if you want to get your retirement game plan right now, call us at 770-622-9145. Guess what the cost is? Zero. Guess what your obligation is? Nothing. You may take our plan and implement it yourself and never see us again. Maybe you're going to take it to another advisor. And some of you may feel the need, you know what? I want to hire you guys to be my investment advisor. After all, we were picked number one for a reason. 770-622-9145. That's 770-622-9145. Be one of the thousands of people that we've helped retire successfully right here in Atlanta and around the country. When I get back, more of the 10 commandments of retirement planning right here on the CPA Wealth Advisors radio show.
How do you safely generate any income in retirements with interest rates next to 0%? $500,000 in a one-year CD will only generate about $400 a month, and that's before taxes. Discover proven and successful strategies to generate more income in retirement. Call the CPA Wealth Advisors for a retirement income analysis. And now back to Gerry and Woody on the CPA Wealth Advisors show.
It's the good life.
Welcome back, everyone, and guess who just walked into the studio? It's G. I told him G. I like to call you G. It's infection. It's an infection. I don't see you smiling over there. Do I get a hug out of that? Nothing. Nothing's happening. Nothing. I just got a look. That's all I got. But welcome back, everybody. You know, I've been talking about it. For many, planning for retirement can be complicated and overwhelming, and we get that. And that's one of the reasons we do our show. Look, if it was a piece of cake, you would already have it done. That's why few people have any plan at all. And they're kind of like frozen like a deer in headlights because they just don't know what to do. So they do nothing at all. And we're asking you, does that ring familiar? We don't want you to do that. Some people, and we say, great, can do all this on your own. Awesome. Some people need help, and that's what we like to be here for. So coming up now in this segment, we are going to continue to reveal the 10 most critical areas that we think will have the biggest impact in your money and your retirement. Now, I just got through talking about creating a financial game plan and all the components that really goes into that and what will happen when you meet with us. There's a lot to it. You don't set it and forget it. Gee, we're on number 2. What is number 2 that you got to deal with?
Woody, they say there are only 2 things in life that are certainty, death and taxes. And while taxes are a certainty, retirement is really the one time in your life when you can plan and you can determine what the tax posture is going to be and the outcome. So planning your retirement without an integrated tax plan is like driving the car with the blinders on, Woody. You don't know where you're going. You really won't know when you get there, but when you smack something, you'll know it. Tax planning in retirement is so vital, and I don't want to say it's simple because it requires quite a bit of knowledge, but there's absolutely no excuse not to have an integrated tax plan with your financial retirement planning. And that includes a dynamic withdrawal strategy that we've talked about many times before, and we're going to talk about again this morning. The ability to determine which pot of liquidity to tap and in what sequence cannot be determined without a comprehensive tax analysis. Woody, the 3 initials. If I were walking down the street, you didn't know me, I walked by you, and I said RMD, what would it mean to you?
A required minimum distributions.
The results that stem from disregarding a required minimum distribution to your retirement plan, and I don't care how much money you have, Woody, is absolutely devastating. Here's a test. Walk into your stockbroker, walk into your financial advisor, say, I got a quick question for you. What do I do about my RMD? Chances are better than not, you're going to get the deer in the headlight. You're going to get perhaps, I'm not familiar with that equity. Let me look up the ticker symbol, RMD. I don't see that. The point is, without a CPA wealth advisor that's prepared to sit and walk through the alternatives with you and can integrate also Social Security planning, Woody. What about taxation on Social Security benefits? Have we talked about that recently?
It's absolutely in every single meeting we do. You got to address that.
And what about Social Security benefits driving you up into a higher tax bracket? Is that a consideration?
Absolutely.
How do you do this if you don't have the software? How many different Social Security alternatives are there?
They've cut down on a few, but it's at least 1,300.
I thought it was 1,379.
It was,
Woody.
so I eliminated 79 because of some recent changes.
I don't think 79 are gone.
No more file
Some are
and
gone,
suspend.
but not 79. I don't know where you got. You're rounding. You're a round guy. Woody, why don't we talk about exploring a Roth conversion and why that often is a key step that everyone should evaluate?
So I think this is one of the most important key tax planning tips that you can think about. And I think it applies, Gerry, to everybody, even if you're over the income limit. Now, before I get into the details of that, because I want to make sure that you have an opportunity to get our retirement master plan, I'm going to come back to that Roth conversion. We're going to do that in the next segment. There's a lot to it, and I told you, everybody can potentially do a Roth conversion. And that's a shock, and maybe have no tax consequences. So hold on to that thought. But what I really want you to think about is answering this question. Do you worry that if you're going to run out of money in retirement? Is that a worry for you?
A lot of people do.
A lot of people do. Do you know if you'll be able to maintain your same lifestyle in retirement? Be honest, do you know that? Or if the skyrocketing cost of healthcare could wipe out your entire life savings. And you know what? It's okay if you don't know, because you're not alone. Anyone retiring today, they worry about the exact same things. And that's exactly where we can help. And we have helped thousands of people retire successfully, not only right here in Atlanta, but really around the nation. And I know we can help you too. So why not get the answers with what we've been talking about each and every week, our 5-point retirement master plan? And you know how much this analysis is going to cost you? Not a single dime. And what you learn, it really can change everything for you in retirement. It's a no-brainer. Call to schedule your customized analysis now. And the sooner you get started, the better off you're going to be. 770-622-9145. 770-622-9145. Because not having a well-thought-out plan for retirement is a total recipe for disaster. And we don't want that to be the case for you. I want to meet you, and I am so proud of our number one ranked, award-winning wealth advisors right here in Georgia. 770-622-9145. And when we get back, we're going to continue with the 10 commandments of retirement planning. And I'm going to tell you why I think everybody can do a Roth conversion, and maybe without any tax consequences at all. Keep it right here on News Radio 106.7.
Time to get your financial act together. Now you can get a free customized retirement analysis with CPA Wealth Advisors. Discover proven strategies to generate more income in retirement. Learn how to maximize your Social Security benefits and minimize your taxes. And now back to Gerry and Woody on the CPA Wealth Advisors Show.
It's the good life to be free.
Welcome back. You're listening to Gerry and my partner and co-host Woody on the CPA Wealth Advisors Show. As Woody said, for many people, planning for retirement can be complicated and potentially overwhelming. If it was a piece of cake, Woody, we really wouldn't have a reason to exist, would we? People would have done it already.
True.
The truth is, few people have any plan at all. They're literally frozen, and you said it, it's true. It's like deer in the headlights, Woody, because they don't know what to do. They're a little bit intimidated by what they don't know. So what do? They do nothing at all. How many of you does this ring familiar to? You know you need to get on it. You know in the back of your mind that you're worried about your lifestyle in retirement, You know you need to do some planning, but you're a little intimidated by it, and you've done nothing at all. We're going through 10 critical areas that will have the biggest impact on your money and on your retirement. We refer to those as the 10 commandments of retirement planning. We've covered a number of them already, and Woody is going to take us through one technique, and you heard him say everyone ought to explore this. And what you also heard Woody say is this can be applicable for everyone. The little-known secret, a Roth conversion is there for everyone. Woody, why is it important? What does it consist of? And why can it work for everyone?
Well, let's talk about this for a second. I'm going to break this down into 3 big areas. But before I even do that, why is a Roth important? Because a Roth is the best thing that we were ever given when it comes to not tax deferment, but tax-free retirement income. Unlike a 401k or a deductible IRA, once your money is in a Roth, it grows tax-free forever. And in fact, it's not subject to the required minimum distributions. So the
RMDs.
The RMDs. So the overall concept here is tax-free growth over a certain amount of time far outweighs tax-deferred growth. Tax-deferred means it grows tax-free until you pull the money out and then it's taxed. So that sets the stage, right? So a lot of people say, well, we're over the income limitation. We can't make a Roth contribution. Now, if you're not over the income limitation and you have a bunch of money sitting in cash doing nothing, well, then it's a no-brainer. You ought to make the Roth contribution. That can be up to $6,000. No-brainer. But what about a Roth conversion? That's taking an IRA and converting it into a Roth. The normal rule says when you do that, you have taxes. You pay taxes on the amount of income that you're converting. And that may be applicable for most people. But what we're finding is this. In that first year or so of retirement, you actually end up with very, very little taxable income, maybe none at all. So for many people, they don't remember that that's the best time to do a Roth conversion, is when you are actually in a year where you no longer have income, and then that Roth will convert just the right amount to keep you at either a 0 tax bracket or the lowest 10% tax bracket. And we need to run the numbers to do that. Now, what about the people, though, forget about the conversion, that are just over the income limitation, and they say, we can't make a Roth. The tax law doesn't allow us to make a Roth. So here's why I say everybody can do a conversion and potentially do it tax-free and also make a Roth. If you have no other IRA accounts, then what you do is you contribute the $6,000 into a non-deductible IRA because you're over the income limitation. So you can't contribute it to a deductible IRA or a Roth directly. Right after you contribute it to the non-deductible IRA, you convert that into a Roth. And the taxes on that conversion are 0 because it was a non-deductible IRA. However, the tax law says you have to also convert a pro rata share of all your other IRA accounts. So if you do have other IRA accounts, this doesn't work. But guess what? If you're still in your working years and you're over the income limitation, you can get rid of those IRA accounts by rolling them into your company's 401k plan that many times is low cost and offers you very good options. Right after you roll it into your company's 401k, you no longer have IRA accounts. And then you can do this backdoor Roth where you contribute to the non-deductible IRA and convert into a Roth. One more big overriding point on this. What about your children? They're often forgotten about. This is especially good if they have earned income or if you have your own business where you can pay them. And we want you to pay them to do something and document that. Guess what? They're not going to be over the income limitation, and they can now contribute to a Roth as well. And the power they have over time is incredibly powerful. Tax-free growth for decades. So those are big overriding themes. Contribute to a Roth. If you can't, do a backdoor Roth. And then third, don't forget your children. They may be able to contribute one as well. But Gerry, tell them how we consider all this and more if they come and meet with us.
You know, Woody, we talk about that retirement master plan and how critical it is. And you asked this earlier in the show, but I want to repeat it. Each of our listeners, I ask you, what's the absolute best investment in the world? Few people know what it is. I promise you, Woody promises you, our CPA Wealth Advisors will promise you, the best investment you could ever make is an investment in yourself. If you'll invest the small amount of time to create a thoughtful and well-thought-out retirement game plan, it will pay you dividends for the rest of your life. It'll also have a snowball effect that could impact different aspects of your life that you never even imagined. This isn't about simply picking a handful of stocks, bonds, and mutual funds. It's a comprehensive plan that covers everything, all of the things that we're talking about on today's show, and then some. And when all these things work together, I promise you, it can have a profound impact on your lifestyle in retirement. The sooner you get started, the better off you'll be. And our calendar is filling up quickly as we move towards year end. Pick up the phone. We've helped hundreds of people retire successfully right here in the metro Atlanta area. And we can help you too. Your initial analysis, won't cost a dime. And in fact, if you don't think you've garnered great benefit, dinner's on Woody for you and your wife.
Oh, thanks, Gerry.
Anywhere here in Atlanta. So you've got absolutely nothing to lose. I want you to listen. Take out your pencil, pick up the phone. The number I want you to call, get ready. It's 770-622-9145. Let's do it in stereo. 770-622-9145. Even Al, the producer, jumped in on that. You thought you were going to hear Christmas carols, didn't you? It's us singing that dial-in number. Pick up the phone. Don't put it off. Grab the power that comes from knowing you're in control. You'll sleep better at night. Keep it right here. We'll be back on the CPA Wealth Advisors.
Time to get your financial act together. Now you can get a free customized retirement analysis with CPA Wealth Advisors. Discover proven strategies to generate more income in retirement. Learn how to maximize your Social Security benefits and minimize your taxes. And now back to Gerry and Woody on the CPA Wealth Advisors show.
It's the good life to be free.
I'm back on the
and
CPA Wealth
explore
Advisors
the
radio show
unknown.
with my partner, Gerry. And now in my favorite segment, because this segment is Gerry's Picks. And Gerry, it's been quite an interesting week. We've seen some rally in the market. A lot of it has to do with the Fed's decision. And I can only imagine you've already done so well. Boy, you must be really glowing over there because you've even done better now than you when we were talking about how well you did last week. So, yes, we want to hear Gerry's picks, want to hear about how you've done so far. And, man, I think we may end up doing pretty well by year end. What do you think, Jer?
I think we're going to be just fine, Woody. We talked at the beginning of the year about the volatility. Everybody's waiting for the Federal Reserve to make their announcement. We knew that interest rates could only go in one direction. It's already dialed in the market, but we're going to have some volatility. It'll continue, no question. But your long-term outlook with respect to equities is intact. The U.S. economy is chugging along just fine. Absolutely no sign of inflation anywhere on the horizon that we can see. And most importantly, employment is strong. Companies are productive. Earnings are solid. These are good times, Woody. These are truly good times.
Love hearing that.
You know, we've been talking for weeks about our dividend growth portfolio and why that asset allocation is so pivotal and key.
Yep.
Want to give you an update on where our core dividend growth portfolio is performing. Those 5 core stocks that we focus on periodically, update the listeners every week: Johnson & Johnson, Realty Income, General Dynamics, that's GD, hitting another high, National Retail Properties, Triple N, and Microsoft, spewing out cash up another 21% over December 31st, 2014. Who in their right mind says Windows is dead? Microsoft Office. Do you know how many copies they keep selling of that thing?
And
it
now
just
it's
keeps spitting.
now it's subscription-based.
Subscription-based, SaaS-based software.
Yeah.
The thing just keeps spitting out cash. In any event, this core dividend growth portfolio up about 3% year to date. You heard it here first. We'll close out the year up north of more than 5%, Woody. North of 5%.
Excellent.
You know, I told you last week I was going to come forth with a Jerry's Picks and identify the ticker symbol for you, despite the fact that you pointed out that listeners across the metro area have been tuning in for Jerry's Picks and sort of cherry-picking the leads, not calling for their master retirement plan and scheduling that appointment like they need to do. Well, I'm going to double it up. We had a great pick for you last week. I got a better one for you this week, and it's a name you know about because a lot of our listeners jumped on the boat at about $54 a share and rode it with me up to $70 a share. I explained that under Obamacare, hospital census, emergency room patronage, and general census across acute care hospitals are up, and there's a severe shortage of healthcare workers. The company that's there to fill in the gap with those registered healthcare workers is Team Health, providing emergency room physicians, anesthesiologists, radiologists, and hospital practitioners or hospitalists. What did Team Health do a week ago? They stepped up and they bought the largest hospital medicine business in the world, IPC, the hospital company. Woody, they paid $1.6 billion for IPC.
Wow.
The street didn't like the deal. They thought it was too rich. The stock got walloped, falling from $70 a share down to $44 and change. Again, the ticker symbol is TMH, trading at $44 and change. I was in New York a week ago, and I saw the CEO of Team Health was on the road in Philadelphia. Woody, for our listeners, I hopped on the train. I took a 7 p.m. train to Philadelphia. I got my boop up at 6 in the morning and went to the institutional investor breakfast to hear the story. I happened to see the leading healthcare service analyst from Morgan Stanley, who I've known for 20 years and I respect, and I said, Brian, how is it that Team Health is trading at $44 and change? I got a target on the stock north of 70. Where are you at? He said, Jerry, you're spot on. It's oversold. They financed the deal with 4% 10-year notes, no convertibility, 4% straight 10-year notes, non-recourse sub-notes at 4%. Their cost of capital is bupkis. But what people don't realize is Team Health's businesses was concentrated in the Midwest, Southeast United States. With the acquisition of IPC, it opens up Texas, California, the state of Washington, Chicago, Illinois, and major markets that Team Health has not been in. So they're cross-selling hospital medicine, emergency medicine, radiology, anesthesiology, and tapping into more of those 6,000 acute care hospitals across the country. The word got out in the last 48 hours. 13 analysts following Team Health. Median target equity price, $72 and change. High, $81 and change. Low analyst estimate, $70 and change. Woody, if the stock does nothing but move from its current $45 up to $85 a share, you're talking about 85% appreciation.
Wow.
If it hits the low estimate, $59 of those 13 analysts, you're talking about 40% on the up. I'm here to tell you they're going to report a great quarter. These guys do not miss. They know how to integrate businesses. It's money for the taking. Jerry's pick for the week, Team Health. The ticker symbol is TMH. This is no Johnny-come-lately. Close to a $4 billion market cap company in a sheer demand industry. Tremendous shortage of healthcare workers, tremendous demand for the commodity they have. They have a new dynamic line of service. It's hospital medicine. Jump on it. And when you call Woody and you call Colleen and you schedule your appointment to meet with our CPA Wealth Advisors and they work up that detailed budget, that qualified retirement plan, that asset allocation, the picks will be some of the themes that they take into account when looking at your risk allocation and your asset allocation. Woody, where do they call for that retirement master plan? 770-622-9145. I repeat 2 more times, 770-622-9145.
622-9145. Let me meet you by year end. Meet our number one ranked wealth advisors, 770-622-9145. And when we get back, it's me, Woody's Goodies. We'll be right back.
The last thing you want to be is 75 years old, full of life and flat broke. Put 55 years of tax, investment, and retirement experience on your side. You're listening to Gerry and Woody on the CPA Wealth Advisors Show.
It's the good life to be
Welcome
free
back. This is Gerry, and you're on the CPA Wealth
explore
Advisors,
the
along with my
unknown.
partner and co-host, Woody. And this is the segment of the show I look forward to every week. We call it Woody's Goodies. Woody's going to share some actionable tax tips for us. This week's tip may run a little bit counter to one of Woody's themes. How many of our listeners have heard Woody time and time again talk about tough love? You need to worry about yourself in retirement. You got to make sure you're financially healthy, put your kids in a position to fend for themselves, look out for themselves, make sure they're financially independent. You're not helping them by keeping them close to the nest. Make sure you don't liquidate your own retirement for the benefit of your kids. But Woody, assuming you've done everything you should do,
Yes.
you've got your plan in place, you've got your retirement in place, you've got an asset allocation, you got a tax strategy, you got a
Yes.
dynamic withdrawal strategy, you're sleeping well at night, you've got the ability to enable your kids to further their education.
Yep.
And do it in a tax advantageous manner. Tell us about this week's Woody's Goodies.
Here it is, Gerry. So we saw this just this week with one of our radio listeners that came in,
I love it.
and they happened to, it was a married couple, both working, both doctors, and they were doing quite well. And they have children, college-age children, that they were still claiming as a dependent. And of course, being doctors and good parents, they were paying for their child's college education. But they weren't getting any benefit for two things. They weren't getting any benefit for claiming them as a dependent, because that's been taken away if you make too much money. And they weren't eligible for the education tax credit, because that's been taken away if you make too much money. So we said, wait a second. Your college student happens to go to school in the same town where you have a medical practice. Yeah, okay, so why not let them work for you a little bit and pay them? They're like, well, we already kind of pay them, don't we? We pay for their college education. Our senior-most CPA Wealth Advisor said, look, let me tell you what you need to do. Number one, you need to put them on the payroll. I want you to pay them X amount of dollars. It's going to qualify them for making a Roth contribution. But here's what's even better. They're now going to be able to claim themselves as a dependent. So they do get the benefit of that dependency exemption, which will eliminate the tax on whenever you're paying them. And if that wasn't good enough, just that right there, he went on to further say, and they're going to pay for their own college tuition. They're going to write the check. They're going to pay for it. And then guess what? They're also going to qualify for the college education tax credit. So now you got the benefit of the dependency exemption, a Roth, and the education tax credit. All, what do you call that? A threefer? A threefer. A threefer, all wrapped up.
Not a twofer, a threefer.
All wrapped up in one Woody's Goodies. It's really a no-brainer, and you may be in this same situation, and we'd like to help you analyze if you are. Now, next week, we don't have a lot of time left before year end, so next week, Gerry, I'm going to be going over the top 8 year-end tax tips, but I'm also going to continue to finish our 10 commandments of retirement planning. So as I said at the beginning of the show, it's really a 2-part show. And we've already covered 3 of the top 10. So I got a lot to cover next week. But I'll tell you what I want to finish up the show with. I really want you to think about, this is the week where you're going to pick up the phone. This is the week where you're going to take the action and call us and make the best investment you can that you can ever make. And that's an investment in yourself. And we know that if you make this investment in yourself, that it is going to be the biggest reward, the biggest return on investment you ever had. look, when you invest the small amount of time to allow us to create a thoughtful and well thought out retirement game plan, it will not only pay you dividends for the rest of your life, but it's going to have a snowball compounding effect. And it's going to impact different aspects of your life that you really aren't even imagining till you see us roll this out on paper for you. So discover how with our free, and it's customized, and we will modify it every single time you need us to, our 5-point retirement master plan. And I want to remind you, it is not simply about picking a handful of stocks and bonds and mutual funds. It's way more comprehensive. All of the things that we're going to talk about on today's show and all of the shows are going to come together when you meet with us, and we're going to put it together in a plan. And you could take that plan away and implement it yourself, or you may give it to another advisor, or you may just say, you know what, I'm going to be honest with myself. I want you guys to keep me on track and implement this plan for me. And we will take care of that for the rest of time and make sure that you live the good life in retirement. That's the theme song of our show. That's what we really try to do each and every week. So, look, the sooner that you get started, the better off you're going to be. And it's year end, so the calendar really is filling up quickly for the next, well, we only got about 14, 15 days left here. So why not come in? We've helped hundreds of people retire successfully, thousands of people retire successfully, not only here in our great city of Atlanta, but really nationwide. And
what about our number one ranked wealth advisors?
They're ranked number one. Now, if a poll came out that they didn't subscribe to and ranked them number one, don't you curious of what maybe their difference is? I would be. I mean, you have nothing to lose. Why not come in and see? Because this will not cost you a dime. And Gerry has told you, I am so confident that we can help you. And I'm so confident because Gerry generously offers me up every week to buy you and your spouse dinner anywhere you want. If we don't add tremendous benefit, if you can look me in the face and say, this wasn't extremely beneficial. Enough with what we can do. How do you get it? You call 770-622-9145. That's 770-622-9145. Colleen will answer the phone, and she's sweet. I hope you're listening, Colleen, because I just love having you answer the phone. You couldn't get a nicer person. We'll ask you a little bit of information, and then we're going to follow up with some dates and times. And I'm going to be there. Our senior-most CPA Wealth Advisors are going to be there, and we're going to get to work for you. And we're going to put this comprehensive plan together and change your life. 770-622-9145. That's how you get it. Gerry?
Woody, I got to ask you a favor. You're going to be running solo on next week's Christmas show. Wish everybody a happy holiday in advance. I'm sorry I won't be with you. Woody, for all our listeners, I'm going to ask you to go in the warehouse with Al and pull out a little holiday gift. It's time to pull out Woody and Gerry's 10 deadliest investment sins. We haven't seen it all year long. Special gift from all our listeners. You need to listen in next week. Woody on the CPA Wealth Advisors. And for your retirement master plan, the number you want to call is
770-622-9145. See you next week, Saturday, Sunday, 10 a.m. right here on News Radio 106.7.